The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, noon till 1 p.m. Eastern Time. My pleasure to be here. And of course, last night was really terrific to see so many tigers at the meeting that I spoke at over at the Boston Investors Group, the IBD, Investors Business Daily Meetup, annual 14th anniversary. And that was a lot of fun, a lot of good questions, and a lot of detailed work that we were going through. Well, let's just look at the market right now. And thank you to Tommy Jr. for a great update. He does really a fabulous 3 minutes of reviewing the market as it stands. Very nice, very clear. So we're looking at the Dow up 46. Let me just show you the E-mini for the first time here. That's up 1250. This is in leg B, gray B, because it's under the previous peak E of the 8th of August at 2488.50. This is very good action. The MACD did cross positive. Stochastic is still quite weak, but it is rallying. On balance, volume strong in the daily. The weekly chart has surpassed the midpoint. So at 2467, even though the moving average convergence divergence, the MACD is weak and the stochastic is attempting at 65% to rally, on balance volume has rallied. And this says that the coming few days are very important, but it's not really in the coming few days. It's today is the candle for the end of the month. So let's look at the 120-minute chart in a leg E, doji candle right there. MACD is good, but starting to lose a little bit of steam. Stochastic's very good at 91%, but a little lower than it was earlier. And even yesterday when we went to peak C at 2454, it's trading at 2468 right now, 1225. So this is going to be a very important close. And then Friday through Tuesday is going to be important. Why? Because this will be the opportunity to make a new recovery high, an all-time high, recovery high in some instances. And if that's the case, we change candles. What do I mean by that? Hey, look at this. The Dow up 45, and this is actually a very weak showing considering the S&P is up 0.47, Dow's only up 0.21. So the Dow is lagging. It was leading, now it's starting to lag. The weekly chart still remains in the sell mode, and I said to subscribers, if there is a close above 22,022, I have to reconsider both the daily sell mode and the weekly sell mode. But in the meantime, I'm going to stay with this thesis that at this particular point, the rotational correction is still continuing. And we've seen that because there is no new high in the Dow above 22,179. Parameters to look for, bigger picture, a close above 22,020s into the 22,050 says, hey, it's just an eye blink away from an all-time high. It's probably going to try for that, make a U-shaped pattern in the weekly chart. But a break below 21,600, that's 340 points from here. That's a lot of points. But a break below that level starts a more intermediate term correction. And that's the camp I'm in. So for subscribers, we are long certain positions, we're short, we have a mix, but the bias actually is more to the long side. However, I must include the fact that we have mixed ETFs. In other words, yeah, we might be long. And for instance, we bought a commodity index the other day, up really nicely since then. But that's a long position in a completely different area to the general market. So it is where we are looking and why we are looking. That is very important. So let me go through the same thing with the SPX. I want to do today something a little bit because I know quite a lot of people will want to be taking off tomorrow for the long weekend. So they've asked me, would I just give a kind of an overview now and then maybe I can do a little more tomorrow. So what I'm looking at here is the S&P daily chart has had a really nice spike. It's gone to a level that says there was a sell mode in place. The characteristics of the daily chart at this particular point are suggesting that that sell mode could be negated, but only if there is a close, not a price punch, but a close above the high of the 16th of 2474.93. Yes, then we could perhaps test the all-time high of 2490.87. I'm thinking that this is wheel spinning right now. It's just end of the month stuff going on. And that what we're looking at is a rotational correction that's been ongoing for quite a while, since the 8th of August. In many cases, it was actually 27th of July. And that hasn't quite finished. Now, I'm going to show you exactly why as we move through these different time frames and different indexes. The weekly chart is saying, hey, the MACD and stochastic are very poor. You can have a bounce, but even if it makes a new high, I'd probably look at that as an F and maybe coming down a little bit in the following 2 weeks. But at this particular point, I'm not making any changes. I'll just give you the parameters. In the 2493 area in the S&P cash, that's the S&P 500 index, the SPX, that's very positive action. A close in that area, I'm saying, hey, this is just a relentless market. It just does not want to take any time for a breather. If there is a pullback over the next week and a half below 2420, no, let's do this. Let's take it as the low of yesterday, which was 2443. If there is a close below 2442, 200 points down in the Dow, 20-something points in the S&P, that's going to suggest there's a failure pattern, a right shoulder failure pattern in the weekly, and it's going to pull back. Now, I want to go to the monthly charts. The S&P monthly chart so far is a pretty good candle. MACD is very strong. Stochastic is good, very good at 95%. And the on-balance volume is only in leg C, a possible peak C right here. And in fact, it's pulling back, but it is still strong. So the parameters that I'm giving on the shorter term apply to the weekly as well. A break to a new high, closing nicely in the 2493 area says, hey. But a pop there and then a close below it on any day, especially on a weekly basis, would suggest that it's a right shoulder failure pattern, and that's what I'm looking at. The monthly chart is still looking very positive, even though it's a leg D. Now, I want to just take a moment to say that the Dow at 21,932 right now, this doji candle that's setting up in a leg E, it says to me, be very careful if there is a close under the 21,600 level on a weekly basis, because that'll impact the monthly chart negatively. Even though the technicals are really strong, but on a shorter term basis, it'll be a negative. And a close any week above 22,179 impacts the monthly candle positively, because it changes what is happening after the doji. Look, here's a doji, this doji back in January of this year, and then look what happened. We closed above it and we kept going higher. There was a doji close in August of 2016, closed below it closed below it the following month, and it went even lower, and then it shot up. So these doji, for me, this is one of the best indicator candles that I can find, and I treat them with great respect. We'll come back and we'll look at all these different things. There's no need to rush to anything. I do believe that the Dow is going to be failing at this particular point over the next few days. So we'll take our time. I'll be right back. Basil Chapman, 38 S&P.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, so we're back. So we've done the Dow. Let's go to the QQQ. Now, the Qs are acting wrong place, typed into the dead instead of right here. So the QQQ series, there it is. Trading right now at 145.89 is a nice candle. 145.97 starts a leg D to the upside in the daily. It starts a leg, an alternate count D/B in the weekly, and it extends leg C in the monthly. That would mean, and that's just what, 93, 4 cents away, and we'll see something very interesting because it's the last day of the month, the last few hours of the month, and bam, all of a sudden, leg C extends into the month of September. And we've got peak D in the den saying, I just knew we would get leg D on the QQQ. You're right. We're very close. Okay. Now, what I am looking, we haven't got it, but we're close. So far, it's peak C1, C2, C3. So we could get it. But what's really important about the QQQ series is that the stochastic and MACD in the daily have confirmed a rally. The stochastic hasn't confirmed a new high because it's only at 65%. It's actually quite weak. And the MACD is strong because it's cross positive. On-balance volumes way at the bottom. If the on-balance volume is going to go from this level all the way to from under 20%, well, it's just over now, but from being under 20% 2 days ago to over 80% to become overbought, wow, then we've got quite a bit more on the upside. Let's just do one thing at a time. The MACD and stochastic in the weekly chart are really quite poor. So I'm going to say that if there is a leg D, what happens next week is going to be absolutely critical. It's a shortened week because Monday's a holiday. So we'll be watching that. But the monthly chart, like the others, is still very, very strong. So let's go to the IWM. IWM right now. Another extended candle in a gray leg A to the upside. It hasn't even been a peak since it made the low of 132.12 mid-August. And now look what it's doing. It's at 139.80. Still a terrible looking chart in the weekly, and the monthly and the weekly. No, I meant the daily and the weekly. The monthly chart, I was skipping ahead, we'll see if there's a close. Well, I don't see how it's going to happen today. It'll have to be something very unusual. But a close below 138.83, a point lower than where we are right now, we'd really have to see a big give back. I'm not sure that's going to happen. Would be a very poor action for the peak Ds that's being formed in the monthly chart. Why? You see this doji? Remember what I was explaining before? A close below the low bar of last month, where there was a doji, would be very negative, and so we'll be going deeper down to the dark side. Okay, let's go to gold. Gold right now coming back after being down. It's actually come back very strong. It's up 9 at 113.23. Leg G/C. I'm thinking, that's what I said the other day. I think there will be a leg D in the gold and in the GLD. I'll get there in a moment. At one, so it'll go to 1332. And it's leg D in the weekly chart. Look, there's your peak C1, C2, C3, and then a leg D. That's exactly what we're seeing in the daily chart potential of the QQQ series. So this is going to be very interesting. Looking at the monthly chart of gold, it's improved technically, but it's still no great shakes. It's still way under the previous major high that was made back in July of last year at 1403. So let's go to silver. Silver right now is acting also nicely. I think silver is going to go to a leg D. I've already written it as a peak C, anticipating there should be a leg D. Weekly chart is improving, not great, but it's improving. Monthly chart still looks terrible. It's improving, but it really does look terrible. Let's just do this for a couple of dinners. Platinum, a peak F, it could go one notch higher, but I think that platinum is getting ready to have some kind of a digestive phase. Let's look at crude oil. Crude oil at this particular point, nice candle, made a peak C1, C2, Chapman wave double top on the 200-period moving average in the daily in the 50 area, and now it's pulled back to 45s. It's trading at 47.19. Good candle. Weekly says, nothing much going on here. Monthly chart says, not very good at all. So we'll see if there's follow through to the upside. Follow through to the upside. It says 48.75 to 49.20 will be excellent action. We'll have to see if that happens. Let's look at the dollar. In my talk last night, and when I did what I was preparing for yesterday, I just at the very last minute, there was a meeting that I scheduled, which was rescheduled, and the people could only meet between 12 and 1. I just had no choice. I had to meet with them. So this is a leg A in the dollar. The dollar's down at 92.74. It's down 15 cents. It's off the bottom of 91.62. Why is that a big deal? It is a big deal. It's a big deal because the weekly chart went 35 weeks to the upside from 91.92 the week of the 6th of May 2016 to 103.82 January, the week of January the 6th. Peak G comes back down, and what we discussed last night is that majority of the time markets go up and down the same price about the same time that it goes up. It can come down. It's only in crash mode or rocket ship mode where you get a change and you get speed involved. So this is very orderly, just a very orderly move to the downside, probably more orderly down than it was to the upside with those big massive spikes back in the week of November the 11th, 2016. I wonder what that was. Wasn't that after the election? Yeah, and then the very 18th of November, big move up. So we haven't had anything like that on the downside. You would think so, but we haven't. We have one ugly candle, and that was that reversal candle week of May the 19th. So what we're looking at here, 91.62 in 34 weeks, 1 week early, with the Chapman wave inside wedge target support line being hit yesterday. I kind of like what I'm seeing. It doesn't mean to say that because you've done this exact left side, right side price time Chapman wave match, that there's going to be a turnaround and you now have to be a bull in the dollar. But I actually think that gold is getting a little toppy right here. And at the same time, I think that the dollar is starting to have the signs. It could even go lower. It could even close lower next week. But it's got all the signs that are suggesting from here, the dollar has a chance to have its first decent rally above the 9-period moving average. It hasn't closed above there since way back in the week of April the 7th, and then it was just 1 week and it was down again. I think this is the opportunity for the dollar, and that might impact some of the Dow stocks somewhat negatively. So we'll be looking at that. What am I missing? Of course, I'm missing the TLT. TLT is also another indicator. It had a spectacular move to a peak, G/C. I should have put that in. G/C, edit. C-A-B. CD. No, wait a minute. I'm missing something. ABCD. Oh, I've got a caller. Mike in Ormond Beach. Mike, how are you?
I'm doing great, Basil. Basil, I got into CX. I hope our friend Scott from Safety Harbor is listening to this, because he's the one that kind of brought this stock to my attention a while ago.
At what price did you get in?
Okay, I got in at $9.10 on Tuesday. The day
Okay,
it
very good.
ran down and hit the 200-day moving average, exponential moving average.
Good eye, Mike. Mike, can you hold on, because I spoke about this last night. I'm going to review what we were looking at. CX is the Mexican cement company, and it's trading at $9.32. We'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So last night we were talking about obviously in Texas, the flooding, etc. And we were a couple of people mentioned some stocks that might be appropriate, or in fact, what happened was it was very circuitous. Somehow that's how we came to discuss certain stocks. And one of them was the cement company, the Mexican cement company, CX. And CX is, in fact, trading right now down 19 cents, but had a spectacular 2 days, going from around about 8.78 to $9 and what was it, $9.52 54 cents, double top yesterday and today, same price. And what I said to the folks is, it seems to me that over the coming few days, the market is going to tell us which stocks will benefit the most from the recovery process. And that Home Depot just seems to me like it's made some kind of a top of significance, because there have been a couple of incidents lately where it would have been appropriate for Home Depot to pick up like it always did before and just shoot to higher highs. And it's been stuck at a peak F in the weekly chart, a potential F in the monthly chart. And it made this crazy, unusual peak C gap island reversal at 160.86 on the 16th of May. So CX did respond very well. It's just coming off a bottom. And if you remember, we were talking about this back in early summer, and I said to one of our callers always calls in talking about CX and other stocks, I said that it looked to me like CX needed a little bit of time. Well, it took time. It went from the 1030s down to the 870s, and now it's had this big spike, and today it's giving some of it back. So what I'm going to say to you, I'm going to ask you two questions, Mike, and you don't have to actually answer them right now for me, but these are questions that I would ask myself. Number one is, am I just did I get in saying, let's see where it goes? Or did I get in saying, I think there's a chance that this could be a more intermediate term move, and my eye says, and then you might have had a target of $9.80 or $10, the previous highs of significance. When you got in, what was your thinking?
Okay, well, I kind of glance at this every day, and I saw that it came down on my chart, the 200 period exponential moving average.
Correct.
And then it bounced up. It rejected that, and I got it like at $9.10. Right. And so that was my reason for buying it, and I thought that it would have a good chance to get to. There was a day, using some of what Tom taught me, is there was like a high volume day that was on, I think it was July 18th. So I thought it had a good chance to get up to like around 970 or something like that.
Okay,
so
because that was at
plan.
$10.01 on the 18th, had huge volume, but that was also a down volume, which was a hint that maybe if it didn't hold the H pattern, lowercase h pattern, it could go lower, and it did that 3 times. It made the lowercase h, and then it finally settled in trough G. That's where we start to look for turnarounds, because that's the equivalent of a G/C right there, and that's where other things can usually happen when it gets that far extended. And it did have this big spike. So this is the reason why I asked you, because I've got two thoughts. One is, if you got in at a very good level and you had a bit of a cushion, I would try to give it one more day. So you're in at 910. I would not take a loss under any circumstances. But it would be upsetting at 926, the 9-period moving average, to say get stopped out, and that becomes support. In the next hour, it's back to 932, and the next day, it's suddenly trading at 953 or something like that. So I'm going to say, if you could think of splitting the position into two parts, one, you could have a mental stop. The other one, I'd have a fixed stop. And that would say, one with the mental stop is try to ride it through for another day, because this is a little deep. This is a little deeper pullback than I would have liked to have seen. It's down 19 cents. If it was down 11 or 12 cents, I'd say, okay, that's a little much, but 19 is a little too much.
I agree with that.
But my 120-minute chart says that's exactly where the 9-period moving average is. So it's trying to treat that as support. The MACD is still good. Stochastic's still good. And that's the reason why I'm saying to you, kind of keep a mental stop going into tomorrow, because if it takes out the 925 9-period moving average support on the daily, it could actually give back that single leg A upside failure pattern. So that's what I'm saying to you. But I would not put a stop in. I've noticed over the last couple of days, just looking at certain things, it looks to me like some people have a lot of time in their hands, and they're looking at certain prices that seem very obvious as stops and buy stops, and they're just hitting those. So I'd make it a mental stop right now if you can. If you're watching, if you aren't, then 923, I just say, I'm out of here. I can always come back in. Not a big deal. But that's what I do. So the other way to look at it is to say, you know what? I got in at 910. all my criteria for getting in were met. It responded exactly the way I wanted it to. Yes, this is a single leg A, but look, the MACD's cross positive, the histogram's positive, the stochastic's good, the MACD's good. I would say the other thing would be put a stop in at 9. This is a fixed stop at $9.12 because you're in at 9.10. So at least you're going to cover just the angst of being there and seeing it given back. But at least you're not taking a loss. But give it a little room. So one is, or you could even have two positions. One has this mental stop of 9.25, and the other one has the physical stop of 9.12. Or you could just say, I'll just keep I'm just going to wait, but I want to see how it holds the next day. And that's my thinking. Right now, you've got in. I don't think you'll have another opportunity to get in if this takes off and goes to 973, 982 over the next 3 days. Then that would be a most beautiful entry point. So to give up a good entry point, sometimes you really need a good excuse to give it up, and I don't see that right now. It met your criteria. So that's my thinking.
Yeah, and Basil, one thing too. I thought about taking the profit yesterday, but on my chart, it went above the 50-period exponential moving average and closed above it. So I figured that was a sign of strength, and also the strength in the stochastic and the MACD turning positive are also reasons that I chose to stay in for a couple more days.
Right, but having come down so severely and having snapped back in an emotional, this is more an emotional rally, because if you look at the volume, you're not getting anything close to the kind of volume we had in the downside. It's good volume, and today's good and yesterday, 9 million and then 12 million. Today so far is only 3 million on the downside. No, I feel very comfortable. That would be my plan of action, what I just spelled out for you. Now, what you really want is by Wednesday, so day off, Wednesday to Thursday of next week, if it hasn't given anything back under that 925 level, but is in fact trading in the 960s, that weekly chart suddenly starts to improve, and that's the big thing. That huge candle from last week, you want to see at some point a close over 954, and that'll be the best thing that you can do. Well, of course, you'd love to see that, but 954, you want to see a daily close, not a weekly, but a daily close above that. That would be very positive. Hey, thanks for calling in. Good eye, Mike.
Thank you. You're a great teacher. You taught me all this stuff, Basil.
Thank you very much. I appreciate that. Good. Mike in Ormond Beach, and we're going to look at the Dow. Dow's up 48, S&P's up 12. I'll be right back after these important messages.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So I had a couple of questions. A question right in the beginning was, would I look at Vail? So Vail is Valet, and Valet SA is trading at $11. And it is up 19 cents. I think it's getting a little bit toppy, but this cup formation is something that I've spoken of positively for quite a while now. And it's a pattern that not always does it make the full cup in a deep cup formation all the way back to the left side high. But in this particular instance, I think it is. And even though on the shorter term, I think it's getting a little toppy at 11.01, I think it could pull back to 10.63, maybe even the 10.40s. If it's just a high-level consolidation, that's going to be very positive. So if you're long, I would just stay long this puppy because the weekly chart is very positive. The monthly chart is really improving. And most importantly, what I'd be looking at is within the context of the commodities and the one commodity index I'm looking at and that we actually have right now for subscribers, it just took off today. It just flew to the upside. And that's saying to me that within the commodities, even though crude oil has been pulling back, crude oil is really struggling. I think it could be a little bit of a bounce, but the weekly chart, monthly chart say, crude oil right now, until it can get from 47 to the 51s, I just think it's chop, chop, chop. There's just a glut of oil. It must be. Why wouldn't it be? Crude oil should have soared $5 to $7 between now, between the incident, the tragic rainstorm and now. I mean, that's the way it should be, and it hasn't. So something's going on. There is a glut probably. So that's there. So Vail, I do like very much. To buy it right here, that's a little tricky. Money management says, wow, percentage-wise on an $11 stock, that could be quite a dip. If it goes to 10, take a 10, 11% decline. So that would be tough. But in the position, the MACD stochastic are looking all good. The only thing I would say, if you don't have Valet, you could nibble on it right now, but your real position would come in the mid-10s. That's where, call me and we'll look at it again. But that's really where you want to be buying it. The next question was, I keep forgetting what that symbol is. Would I look at, I have it right here. AVH. AVH is Aviance Holdings, South SA. So this is an airline, right? It's in leg D with a doji right here from yesterday, above the 200 period simple moving average. It's at $7.60, down 8 cents. MACD is good. Stochastic is 90%. That's good. I'm looking at the weekly chart. I see a cup formation. I'm looking at the monthly. A lot of work to be done for the monthly to improve, but we've seen this pattern become very positive before. So this is what I'm going to say. if you are looking at if you're looking at AVH as a buy for more intermediate term, then I would say, yes, you can start your position here at 760, but this is not really the position. Position is to be at testing over the next 3 weeks or so. See how it tests $7.42 to $7.21. That's where, if you start to ask me at that point, I'm going to say to you, yes, the weekly chart is improving technically. I do like it as a position. I'd prefer to have it, even though it's what's 20 cents in a stock that has the potential to go to a leg D above 1091. Well, it's a big deal, because if it fails at the 200-period moving average and breaks 720 support, that could go down quite a bit deeper. So as the person who asked does take positions prepared to wait months and months and months. So I'm saying, yeah, right here at 760 at a peak D, knowing it's a D and that it should be pulling back, I'd nibble. Why? Because if it breaks out to the upside and goes to 780 for any reason, that's really good action. That's saying to you, you might not get it for a long time between 742 and 721. So you might be having to start another small position a little higher up. So that's my thinking. Be prepared that it can pull back, but is acting very well. Next question I had was IWIYT, which is the transportation index. This is the other sign that I have that suggests that we're going to get into a real bumpy area over the next week or two. Looking at that monthly candle, until we close today, until we begin September, I'm just going to say there's a heads up here to say all things are not well in Denmark, whatever the expression is. So be careful. Let's go to John in Philly. John, how are you?
Hey, Basil. Thanks for taking the call, sir.
My pleasure.
Say, Basil, I wanted to ask if you could pull up and do your Chapman wave analysis on ticker symbol IGV. That would be iPad Gary Victor.
And this
Basil,
is the iShares North American what?
It's software.
Software. Oh, tech software. Okay.
So what this ETF has in it, it's a portfolio. The 10 biggest names comprise the majority of it. It's got Microsoft, Salesforce.com, Adobe, and they're all doing very well. So my question is on IGV. It's at new highs. And I'm wondering if you can determine from the Chapman wave techniques whether this pattern to new highs is one of three things. Either a topping pattern shortly, a rally extension pattern, or an acceleration higher pattern. I'm just trying to get a gauge of this myself.
So we spent a little time last night at the Investors Business Daily and the Boston Investors Group meetup. I discussed the XLK, and do you know offhand if they actually match in chart formations? It looks to me like they do, because I've got the note. It doesn't matter. I'm actually finishing the notation as we speak. I'm finishing up. I just wanted to see if that's a peak or not. So, folks, we're looking at IGV trading at 114.39. Okay, trading at 147.04, up 1.020, and everything about it in the monthly chart, and I had a feeling this was going to happen, tells me that this is a leg B. I can't make up anything other than to say the pattern that has formed in other charts like the XLK turns out to be in the monthly chart, which the S&P Select Tech Fund, XLK. Just keep your eye on the right chart. And if I can stop typing on the chart, but in the little box right there, you'll see that the XLK has made a leg C. And it has very much the same pattern. And it's very strong. And in the weekly chart, this has just gone to a leg D. Right now, as we're speaking, it broke out. Broke out today. That's what we were looking at yesterday. And I drew in the stalk leg formation, and I said, I think there's a chance that we can get another spike to the upside with a brand new all-time high in the XLK, which is trading at 58.80, up 0.32. Now, let me just go to the IVG one more time. Folks, keep your eye now on the left side chart. Left is the daily. Middle is the weekly. Right side is the monthly. Changing charts. Here we go. No, we're not. We're going to IGV. IGV. You've got to get the right symbol. There it is. IGV on the left side. And it has a different pattern. Good. We've got a break, John. I'm going to take this break, do the notation, and the daily and the weekly. It has got, but it is in the leg D, if I'm correct. I'll check it out. But I think I'm about to say the same thing about both charts. Give me a chance. Can you hold on?
Thank you.
We'll be back with John in a moment.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
So I'm just finishing off with my Chapman Inside Track channel. There it is. Okay. So in the daily chart of IGV, which is the iShares North American Tech Software ETF, it's going into the Chapman Wave sell zone or repellent zone. And it's in a little doji leg D. The last D had a very sharp intraday pullback and then went from the 146s down to the 137s. And now we've made a cup formation with a higher high on the right side. And the technicals are not as good as they were, but they're still very good at 91%. So far, no signal other than to say consolidation in the daily. The weekly has recycled to a G/C. I'm inclined just at the moment to give it the benefit of the doubt and call it a C rather than a G, but the stochastic is at 70%. That's not that good, and the MACD is not yet cross positive. But the monthly chart is extremely positive. So if you don't mind, I'm going to say to you, short term it's getting a little toppy, and I wouldn't be surprised if the 148 starts a reversal. But 144 is really the key support. A break under between 144 and 143 support suggests that you're going to go to the bottom or use sideways motion to get to the up channel support level, which is in the 142 to 140 area. Just one step at a time. Haven't even got a signal of a peak D yet, but I suspect we are very close. And I think the daily says we're close to some kind of consolidation. The weekly says very strong until it turns out to be the same thing. Until 143 support goes, it's holding very, very nicely. If it pulls back next week, then the MACD will become deflect lower, and the stochastic will pull back more. That'll be a negative, but it'll still be only.
Can I stop and ask you a real specific question?
Yes.
Thank you so much for this, by the way. On that weekly chart, we're in a leg G/C. If
Correct.
we top, if this week tops or next week, and if this weekly chart comes back under the 9 EMA, that 141.79 that I'm seeing on Tiger TV, if that
would I call it a
leaving
peak G?
a potential peak C on the
Right.
weekly.
No,
or
for me, John.
do you see deep downside if that happens?
John, to call it a peak G, it needs to close in under 140.
Tom O'Brien.
Thanks, folks.
Just
We'll be back
announced
tomorrow.
he'll be coming to Boston September 30th for a free workshop, The Art of Timing the Trade. Join Tom O'Brien Saturday morning, September 30th at the Boston Marriott in Burlington, Massachusetts, as he breaks down his trading methodology and provides you with the tools to become a more successful and profitable trader. Everyone that attends in person will receive a free signed copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. Daryl Martin from Apex Investing Institute will also be presenting for 90 minutes at this free event.
Hi, folks. This is Tom O'Brien. Join me in Boston on September 30th as I return to my hometown for a workshop about the art of timing the trade. I look forward to seeing all the tigers and tigresses for this special free event.
All action starts early at 7:30 a.m. with a continental breakfast and wraps up at about 1 p.m. Topics that Tom will be covering during his presentation include quality volume, cause and effect, ABC structures, swing points, and much, much more. For all the information on this free Boston event taking place Saturday, September 30th, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a